Warren William here from Smartest Data, helping you understand the language, jargon and all the ins and outs of the stock markets and investing in general. Quick definitions continues with inflation. So what is inflation and how is it measured? In this video, I will cover the three main causes or drivers of inflation. So let's go to the video to find and explain inflation. At the end of the video, there'll be 3 quick bullet points to take away. The three main causes of inflation are demand pull, cost push, and inbuilt inflation. Measured at the consumer level by CPI, Consumer Price Index, and the industrial level by the PPI, Producer Price Index. Data released monthly as year-on-year change in percent. Consumer and industrial inflation both measure the changes in the prices for goods, consumer items and services or production inputs in the economy. Inflation data is expressed as a year-on-year change in percent and released monthly. In an economy, the root cause of inflation is divided into 3 sources: demand pull, cost push, and inbuilt inflation. Demand pull inflation occurs when the productive capacity in an economy is insufficient to keep up with the growth in demand. Therefore, there is an increased competition for the now limited resource. If the cost of inputs into the production chain, for example, energy costs increase, this could cause cost push inflation to occur. Finally, if there is the collective expectations by consumers that future inflation will be higher, this is inbuilt inflation. The Consumer Price Index measures consumer inflation via monitoring the change in prices of a basket of goods and services. These items commonly used by the consumer and include transport, pharmaceuticals, food and clothes, to name a few. In the US, the CPI is via a survey conducted via the US Census Bureau. Industrial inflation is measured by the Producer Price Index, PPI. The PPI is also done by a survey of the change in input prices, raw materials and energy in the production chain. A normal level of inflation can be good for stocks as it could give some pricing power. Rampant inflation, rampant deflation are potentially disastrous for an economy. In closing, 3 quick bullet points regarding inflation. There are 3 main causes: demand pull, cost push, and inbuilt inflation. Measured at 2 levels, consumer and industrial inflation. The consumer is by the CPI, industrial level is by the PPI. Price instability is potentially disastrous for an economy.